Bold scrolls topping opener, designed to launch triumph, turbulence and titans, wealth, power, and defense in tech's new frontier into viral territory. What if the tech world's greatest fortunes and its most secretive military alliances all collided in one explosive story? Brace yourself as we reveal how Bill Gates could have been the world's first Mark Zuckerberg toppled Jeff Bezos in a single trading day, and Meta quietly recruited ex-Pentagon heavyweights to weaponize AI and VR, shaking the very foundations of Silicon Valley and national security. This video weaves together 3 seismic shifts in the tech world, from a mind-bending Bill Gates, what if that would have made him the first trillionaire, to the day Mark Zuckerberg unseated Jeff Bezos on the billionaire ladder. Finally, we pull back the curtain on Meta's bold pivot into defense, revealing how ex-Pentagon heavyweights are being courted to weaponize AI and VR for national security. Viewers will gain insider perspectives on how fortune, influence, and military ambition are colliding at the heart of Silicon Valley. What if I told you Bill Gates could have been the world's first trillionaire, outranking even Elon Musk simply by never selling a single share of Microsoft? Stick around, because the numbers you're about to hear will blow your mind. How Bill Gates could have become the world's first trillionaire left Elon Musk in the dust. Before diving into the twists of fate and finance, here's the bottom line. At Microsoft's 1986 IPO, Bill Gates owned roughly 45% of the company. If he'd held onto that stake through all subsequent stock splits and market gains, his Microsoft shares alone would be valued at well over $1.3 trillion, today easily surpassing Elon Musk's current net worth of about $395.6 billion. In this video, we'll explore how early decisions, massive growth, and strategic sell-offs shaped the fortunes that became emblematic of the tech age. The early years, Gates' 45% stake at IPO, setting the stage. When Microsoft went public on March 13, 1986, it priced its shares at $21 apiece. Price later adjusted to $28 by the end of the first trading day due to soaring demand. At age 30, Bill Gates sold just $1.6 million worth of his Microsoft stock, retaining approximately 45% of the company, equal to about 45 million shares based on the initial share count. The value of that stake, then retaining 45% in 1986, meant Gates held a position valued at roughly $350 million, a fortune in its own right, but small compared to today's tech giant. Few could have predicted the meteoric rise that lay ahead for Microsoft. Microsoft's meteoric rise, stock splits and compounding gains. Microsoft has executed 9 stock splits since its IPO, effectively multiplying each original share many times over and vastly increasing its market capitalization. Adjusted for splits, Gates' initial 45 million shares would have grown to over 2.1 billion shares today. Current share price and market cap. As of early May 20, Microsoft's share price has traded in the $450–$470 range, with a market capitalization north of $3 trillion, multiplying 2.1 billion shares by $460 per share yields, a stake valued at approximately $966 billion even before accounting for the company's continued growth since that snapshot. Doing the math. Gates versus Musk. Bill Gates's what-if fortune. Financial analysts at Forbes estimate that if Gates had never sold a single share, his holdings would today be worth $1.3 trillion, making him the first trillionaire in history. Other outlets, like Yahoo Finance, arrive at a similar figure on $1.2 trillion when factoring in dividends and spin-offs over the decades. Elon Musk's current net worth. By contrast, Elon Musk, whose holdings span Tesla, space, and other ventures, is currently the richest person on the planet with a net worth of roughly $395.6 billion. Even at his peak, Musk's wealth has hovered around the $450 billion mark, still far below the trillion-plus valuation Gates would enjoy under this hypothetical scenario. A stark comparison: Bill Gates, $1.3 trillion. Elon Musk, $395.6 billion. Gates' unrealized gains would outstrip Musk's fortune by over $900 billion, margin larger than the GDP of many countries. Why Gates sold? Funding, growth, and diversification. In the late 1980s and 1990s, Gates sold shares to fund Microsoft's expansion, developing Windows, Office, cloud infrastructure, and more to diversify his portfolio into biotech, real estate, and philanthropic endeavors, philanthropy, and beyond. In 2000, Gates shifted focus toward the Bill and Melinda Gates Foundation, selling stock to fuel global health, education, and poverty alleviation projects. Today, he holds just a 0.01% Microsoft stake worth about $7 million. Reflections on timing and legacy. The opportunity cost of selling. Had Gates opted to diamond hand his shares forever, he'd be the world's first trillionaire, far beyond Musk's current riches. But that choice would have come at the expense of Microsoft's growth capital, Gates' diversification, and perhaps the philanthropic legacy he's built. Wealth versus impact. While this thought experiment underscores staggering sums, it also highlights differing legacies. Musk's in interplanetary travel and electric vehicles. Gates is in software, ubiquity, and global health. Both have reshaped the world, but from very different ledgers. In the end, fortunes in tech aren't just about the shares you keep. They also about what you do with the proceeds you harvest. And in that sense, both Gates and Musk have chosen paths that extend far beyond balance sheets. Picture this. The very architects of America's defense strategy are Pentagon briefings for Meta boardrooms ushering in a new era where your social feed could be powered by ex-military insiders. Meta's Llama AI model may have opened the door, but it's the recruitment of former Pentagon heavyweights that truly signals Zuckerberg's bid to weaponize virtual reality and AI for U.S. defense. Stick around because this shifting alliance between Silicon Valley and the military could redefine the future of warfare. And your privacy? Imagine logging in tomorrow morning to discover Jeff Bezos has been dethroned as the world's two richest men by none other than Mark Zuckerberg. How did the Meta boss outmaneuver Amazon's founder in a single trading day? Stick around, because the answer will shock you. From prime to second, how Mark Zuckerberg overtook Jeff Bezos on the billionaire's ladder. Before May 5, 2025, Jeff Bezos reigned as the world's second richest person with a net worth of $209 billion. By the close of that day, Meta's CEO Mark Zuckerberg had surged to $212 billion, pushing Bezos into third place behind Elon Musk, two, on the Bloomberg Billionaires Index. This seismic shift was driven by a 16% rally in Meta stock over the past month versus Amazon's more modest 6.33% gain, fueled by Meta's robust Q1 results and investor enthusiasm for its AI investments. The tipping point: Meta stock rally, Q1 revenue, and market reaction. Meta reported first-quarter revenue of $42.31 billion on May 1st, beating analyst estimates of $41.39 billion. And forecast Q2 revenue between $42.5 billion and $45.5 billion, well above Wall Street expectations. As Meta shares climbed over 16% last month, Zuckerberg's fortune grew by $846 million on May 5th alone, while Bezos saw a $2.90 billion drop in his net worth that same day. Market dynamics. By Monday's close, Bloomberg data showed Zuckerberg's $212 billion trailing just Elon Musk's $331 billion, with Bezos at $209 billion, a reversal of their standings just days earlier. According to the Bloomberg Billionaires Index, Meta's share price surge outpaced the S&P 500's 11.52% rise, underscoring the market's appetite for AI-driven growth. The numbers game. Net worth snapshot. How the ranks shifted this week. Elon Musk, $331 billion. Mark Zuckerberg, $212 billion. Jeff Bezos, $209 billion. Meanwhile, the Hurun Global Rich List notes a record 3,442 billionaires worldwide, thanks to strong tech and AI sector gains. Long-term context. Had Bezos retained his peak wealth, he might have permanently held no. Instead, his stake in Amazon up just 6.33% over the past month lagged behind Meta's double-digit gain. Behind the scenes, why Bezos' stake lagged. Amazon's modest gains versus Meta's lead. Amazon's stock climbed only 6.33% last month as e-commerce growth normalized, and investors looked to AWS profitability, whereas Meta's pivot to AI and cost-cutting measures delivered a sharper share price uptick. This divergence underscores how sector focus and investor sentiment can swiftly reshape fortune rankings. Strategic shifts. Bezos has increasingly diversified beyond Amazon, investing in space travel, healthcare, and media, selling shares to fund these ventures, which may have contributed to Amazon's slower recent gains compared to Meta's concentrated AI push. Implications for the tech titans. What this means for the Billionaires Club? This reshuffling highlights the volatility at the top of the wealth pyramid, where single-day market moves can append decades-long standings, with Elon Musk's net worth also sensitive to Tesla's sheer swings. The tech giant rivalry for billionaire supremacy remains as fierce as ever. Looking ahead, as the AI and AR developments continue to drive Meta's outlook and as Amazon navigates regulatory scrutiny and sector competition, the rankings may shift again. For now, Zuckerberg's ascent marks a milestone in the tech industry's ongoing wealth saga. Picture former Pentagon chiefs walking into Meta's campus, ushering in a secretive new alliance where AI and your social feed become instruments of national defense. Inside Meta's new military play. How ex-Pentagon officials are powering its defense ambitions. Meta Platforms has quietly ramped up efforts to partner with the U.S. government by recruiting a wave of former Pentagon officials to lead its outreach on AI and virtual reality services for national security agencies. This strategic hiring spree follows Meta's decision to open its Llama AI model for authorized military use and underscores the company's ambition to secure lucrative defense contracts. As big tech increasingly courts Washington, Meta's moves mark a notable acceleration in Silicon Valley's embrace of the defense sector. Meta's strategic hiring spree. Public policy managers with security Meta is actively seeking public policy managers ideally with prior Pentagon experience and active security lead our outreach to national security and foreign policy agencies within the executive branch. One open role focuses specifically on engagement with the White House and requires deep familiarity with defense policy and legislative processes. Former Pentagon moves. According to Forbes, multiple former government officials confirmed that these recruiting efforts are aimed at bolstering Meta's team in Washington, D.C., months after the company granted approved military users access to its Llama AI platform. TypeRanks reports that these hires will help Meta market its AI and virtual reality products directly to federal agencies, including the Department of Defense. Driving factors behind the shift. Llama AI model for military use. Meta's pivot began when it opened the Llama large language model for restricted use. Bias national security entities an exception to its general policy, barring military applications. This move was justified by Meta leadership as essential to maintaining US AI leadership in the face of global competition. Virtual reality and metaverse applications. Beyond AI, Meta is positioning its virtual reality and meta platforms as critical tools for advanced training simulations and battlefield visualization. By leveraging technologies originally built for consumer entertainment, Meta aims to carve out a new niche in defense. Contracting, who are they hiring? Profiles of key hires. While Meta has not publicly named individual recruits, INDUSTRY, insiders point to senior Pentagon aides and defense policy directors among the candidates. Such hires bring not only technical knowledge but also established relationships with federal role of national security experience. These officials are expected to navigate the complex procurement processes of agencies like the Department of Defense, the National Security Agency, and the Office of the Director of National Intelligence. Their insider expertise will help Meta tailor proposals to stringent security and compliance requirements. Implications for Meta and U.S. defense. Competitive edge in tech and defense. By integrating former Pentagon talent, Meta hopes to outflank competitors like Google and Amazon Web Services in securing government AI and VR contracts. This strategy may accelerate the company's defense sector revenue streams and diversify its business beyond advertising. Ethical and privacy concerns. Meta's deepening ties to the military have reignited debates over the company's ethical obligations and user privacy, especially given past controversies over data sharing and surveillance. Critics warn that blending social media infrastructure with defense projects could erode public trust and raise civil liberties issues. What comes next? Potential government contracts. With the new hires in place, Meta is expected to submit bids for pilot programs in areas like AI-driven intelligence analysis, secure communications platforms, and immersive training environments. Observers will watch closely to see whether these efforts translate into awarded contracts and significant revenue gains. Industry and public response. As Meta continues to blur lines between consumer tech and defense, other Silicon Valley firms may follow suit, potentially reshaping the tech government ecosystem for years to come. Meanwhile, advocacy groups and policymakers are likely to intensify scrutiny of this evolving partnership, balancing national security imperatives against concerns over corporate influence and privacy.